When we are talking about marginal tax rates, in our example 24%, it doesn't give you a lot of information how much tax you paid. It just gives you the additional dollar amount that you make, how much tax it will be subject to. So a lot of people will refer to something called effective tax rate when they talk about taxes. That is why you should familiar yourself with this concept as well. This represents the percentage of taxable income that an individual actually needs to pay. The formula is very straightforward. It's just the total tax divided by the total taxable income. If we go back to the previous slide, we can see that our taxable income is $140,000 and our total tax is $27,680. And if we divide each other, which will give us an effective tax rate of 19.77%, which is higher than a marginal tax rate. And the 19.77% is the effective tax rate, which represents the percentage of the tax paid divided by your taxable income. You can see that it is lower than the marginal tax rate of 24%. How did we get to 24% again? If we go back to the marginal tax rate calculation, this 24% is the tax rate that you will be subject to if you earn an additional dollar. And the reason why the marginal tax rate is higher than the effective tax rate is because you have a portion that's subject to 10% and a portion that is subject to 12%, and then a portion that is subject to 22% and 24%. And the effective tax rate is just the weighted average of different tax rates based on different buckets. As you can see, the marginal tax rate doesn't give too much information because it just gives you the tax rate that you will be subject to. The marginal tax rate just gives you the tax rate that you are subject to for each additional dollar you make. However, it doesn't give you a full picture. But knowing the marginal tax rate is important because you know you cannot really control your W-2 information, and you will want to know whatever decision you make at this point, how much tax you need to pay and how much tax you'll be subject to. That's why you need to distinguish the two concepts between effective tax rate, which is the total tax divided by the taxable income, and the marginal tax rate is just the tax rate that you are subject to for each additional dollar that you make.